to the Pulver Report. It is 9 o'clock on the 20th of May. Let's get started. This trading week is May 20th through the 24th. We're sitting near all-time highs. Last week was just more of the drift and the melt up. We've got some earnings this week, but we're kind of on the end of the earnings season. But the big one is going to be a big one, and it's NVIDIA this week. We'll take a look at that along with everything else. We're understanding that there's risk in trading. We know there's risk. Please use trade capital only. Everything we're talking about here in the Pulver Report is for educational purposes only. You know the deal. Let's go to the summary this week. We have 152 companies reporting earnings. These are some of the notables that I'm looking at. Mainly, I would say Toll Brothers might be interesting. I'll price that one out. That's a home builder. Target for consumer retail. We've had softer retail sales. We'll see if the consumer is ultimately pulling back. Elf Beauty, I actually took a bear call spread on that and had some full profit with May 17 expirations. And that was a crazy, crazy bullish stock for a while. So I decided I'm not going to go up any higher. And I was right, fortunately. But all eyes on NVIDIA, $2.31 trillion market cap with earnings this week. Now, why is that important? Because if you look at Apple is $2.91 trillion, and Apple was a big contributor on the daily time frame to why we had a big push higher. This gap was Apple earnings. You can see here that the earnings were slightly better than expected, but the big push overall was a massive buyback. So the market took it with a, optimistic slant, I guess, or angle, and ran with it, and the broader market was up, and this is stock number one as far as market cap. So 2.3 trillion. Let's go to the S&P right now. Let's go to sector performance. If we go to the year to date, what is a little nuts this year is S&P, NASDAQ, Dow. Dow cracks 40,000 for the first time first time ever, and marked a full doubling since I believe 2017. So it's been 7 years. Dow has doubled. S&P's up 11.18% for the year. The sector that is leading the charge, utilities. Good old XLU leading the way. Benji wants to say what's up this morning. Pop a squat, buddy. Utilities leading the way, 14.23% year to date. Financials 12.9%, also not far behind our boring financials. Real estate down, consumer discretionary down, flat. Staples up, energy 13.28%. So we have energy right up there near the top of the food chain this year for year to date. Communication services and technology 13.69%, 10.05% respectively. Utilities 14.23%. That's a big one. And holdings wise, let's go to the big ones. So yes, we have some performances that have been pretty ridiculous. Vistra Corp, 144% year to date. Constellation Energy Corp, one of the top performers of the year, 82.32%. Energy sounds like you're just saying the same word twice. And NRG Energy, 59.19%. Next Era Energy, 25.27%. We go to index weight. The big ones, Next Era Energy at 14.27, up 25.27 for the year. Southern Coast, 7.93 weight. Duke Energy, 7.32. Constellation Energy, 6.2. I think this is a big reason. This is probably the biggest reason. With CEG, with a 6.2% index weight, up 82% for the year. That is, I wouldn't say single-handedly, because there's obviously a lot of utility companies that are having decent performance this year. Next Era up 25%, big one, of course, for the index weight and doing well, outpacing the S&P this year. Southern Co, almost 8% index weight, outperforming the S&P this year. So, but Constellation, that's kind of the standout, right? I mean, that's 7 times better, almost 7 to 8 times better than the S&P, with a pretty large holding for the utilities sector. So that's the big one. I have had naked puts in utilities all year. I haven't been assigned on a single one. I've just been collecting income on those. But anyway, let me go ahead and bring the chat out. Say good morning to everybody. Ruth Ann, good morning. Jan, good morning. Angela, what's happening? Joe, good morning. Chris, Daniel, Steve, Jason, good morning. Let's see here. Gary, good morning. Andrew, good morning. LG, good morning. Happy Monday, everybody. Happy Monday and good morning. Perfecto. I was in Seattle for the weekend for a Tasty Trade conference. Really happy that I went. That was an awesome time. The venue was great. The Showbox, right in Pike's Place downtown, a little touristy in Seattle. Went to the first Starbucks on Pike and First. Went to the market, watched a fish toss, and had a great session. So panelists, let's see. I've got my handy little book, CME and CBOE put down with Tasty Live and Tasty Trade. They had a great great panel. Jamal Chandler was there from Tasty, Mike Butler, Nick Batista, Pete Mulnett, Katie McGarrigle. Hopefully I'm saying that right. And then, of course, Tom Sosnoff. So awesome show. And yeah, it was just great information. The big takeaways from it would be strategy diversification, product indifferent, adding futures to the portfolio, having a good VIX, having it be non-correlated, and trading on probabilities. So really cool stuff. We'll talk about some of the details in this week's trading rooms. Mainly equities on demand was a good way to kind of craft and think about the portfolio, especially in a non-correlated way. And for me, I'm certainly going to start looking to add a lot more futures exposure. There's ways to do it. Tasty Trade has awesome products to get into futures. I mean, they have micro futures, which are very low cost. And for the way that I trade, some of my zero DTE trades where I'm taking little butterflies in the SPX or trading broken wings or whatever looks good, I certainly would like to experiment more with some intraday, intra-week futures exposure, simply because I think I can do a pretty good job finding direction, and doesn't have to be much. But if I'm adding a couple of trades through the week or a couple of trades through the month to either one, hedge my core positions, or to add income to the overall portfolio to lower cost basis and just have some extra profit for the week and boost performance, is always a good thing. Okay. Do I do options on the QQQ? I sure do. Absolutely. I've been looking at gold, looking for a great pullback. Big NVIDIA up on Wednesday. Yep, that's correct for earnings, Jason. You're right. Yeah, let's go to the notables I said earlier. So the big one is going to be NVIDIA. NVIDIA sitting near all-time highs. I think this is going to be interesting. If you were with me last week for the poll report, we did talk about a couple of things, and my indicator did come to fruition. I expected to see some overbought conditions with divergence. Okay, so right here, basically we have higher highs in price, we have a disagreement in momentum, and we also have this overbought condition on the relative strength with hidden bearish divergence. But we're sitting here up about 40 cents or so pre-market on the QQQ. We're up pre-market a little bit on everything. Let's take a look at the futures dashboard for a moment, see what's happening. Futures flat on the Dow, flat on the S&P, flat on the NASDAQ with a little bit of a drop off here since 6 a.m. Gold, I got a chart alarm going to all-time highs. Silver, also having a pullback. Silver had a great rip last week, up like to $28 and change. Let me see what silver was at as we come into this week's trading, USD. So silver with a big rip up towards 32. And what was nice about that is the previous resistance was 29.86. So that's a pretty convincing rip up through that $30 handle. I'm still measured out to 35.76. If I go to my positions, mainly my exposure on silver, which actually is 3 cents higher, I would expect to see a bit of a pullback and maybe a gap fill. But this is SLV, and one of my better running positions right now in the portfolio. I'm long at $20 with some calls. I'm looking for some ownership. I didn't have to do anything last week with the 27 by 26 credit spread. I took full profit on that. And I will just continue to look to add some additional exposure. So at this point, I might look to see what the implied volatility is on SLV and silver in general. I might add some, if I can do some micro futures on silver, I might add to the core position and try to get long and time this, or with time on my side, maybe do some selling on some option trades. But gold and silver both looking pretty darn good. Yes, a pullback could be possible. Here's gold. Previous highs at, actually, what am I doing? That's silver. XAU USD. Gold taps some fresh highs, but again, a cause for concern would be right here. There's a high, there's a high. Okay, and you can see that little connector. That is overbought conditions with divergence. So if I show the chart right here, this is what I mentioned last week was going to be my concern going into Friday's trading. So we have a high, disagreement. I see some bearish divergence for the market. And again, what could be the catalyst this week? It seems weird, but NVIDIA could be the catalyst this week for a, let's say NVIDIA beats earnings again and the market gets all excited. I would be a little cautious with a gap higher in the markets because I feel like that gap could get filled along with some momentum to the downside just in a bit of a corrective fashion. So I do want to be mindful of that this week, but take a look at the ETFs really quickly. All of them look the same. Okay, so higher highs in price, disagreement momentum, hidden bearish divergence on the relative strength, a little bit of caution moving forward. Here's the DIA, same thing, right? My indicators printed, that's overbought conditions with divergence, and we're sitting at all-time highs. So it makes sense to see a bit of a correction. How big? Well, I don't think we're necessarily going to print a topping pattern. I could see NVIDIA, pushing the market higher, and maybe enough so that if we do have a pullback or correction, all we do is come back and fill a gap, and then we build from there once again. And the bulls can, gather their strength and buy, maybe a 2, 3, 4% correction. Now, the corrections we had in April, anywhere between 5 and 8%, depending on the index. So, the Dow was a 5 to 6% correction. SPY was 5 to 6% correction. The Qs were corrected over 8%. The Russell didn't really move a lot. It still remains pretty choppy. So, anywho, but they all look the same, right? And now looking at gold, here's gold. Gold on a weekly time frame is not quite to overbought conditions yet. It's not quite divergent yet. But if I go to the daily time frame, maybe it is. Yep. So daily chart is stretching from this high to this high. I don't have the momentum disagreement that I'd like to see, but we do have overbought conditions. And, we have some missed pivots along the way as well. Now that I'm seeing this, we have a couple of weekly pivots out there that could be up for some grabs on pullbacks. Let's go. I'm sorry, that was silver. Here's gold. There it is. Gold, definitely some divergence. So this high, some disagreement here, some hidden bearish divergence on gold. So be careful if you want to be a bear all of a sudden on gold, because I don't think it'd be much of a, if anything, we go sideways, right? Maybe we have a broadening pattern on gold where if we come down and it gets a little bit trickier, maybe it tests this level. I don't see that necessarily as I'm going to check that bar count actually. I don't see that necessarily as a bad thing to get a correction on gold. I could see it being volatile. We could pull back to 2,300 and we could shake out some of these longs. I still like gold exposure. I still like gold to the upside. I still think gold over the next 1 to 2 years is probably going to outperform or rather perform well. So I still like the exposure. I'm just picking my battles. And honestly, I still like silver more just because of the technical setup and the actual functionality of the metal as opposed to precious and store value and stuff like that. So I still think silver is a better trade. They might both have pullbacks. Maybe the outperformance would be here's XAU versus XAG. And we have been on a pretty dramatic shift from early May. Silver has outperformed gold in a pretty big way. So for me, this has helped my position quite a bit because I was out of gold on that first leg higher. When gold got up here towards 2,400, I was trailing stop losses, getting profits, and I bought in on the dip right here. But my longs that started back here at like I think GLD, I was long 190. I was long 190 to 210, and I certainly forfeited some profits. I think I rolled up to like 212.50. Ended up adding another like 5 or 10% to the trade. So, I was pretty happy overall from 190 to 212.50. Certainly missed out on some upside potential there, but I got back in and just buying GLD on the dip and pullback around 212, which is now up about 10, $11 a share. Silver, on the other hand, still doing pretty well. Okay. Let's see here. Ruth Ann, if you have an account with Tasty, I know that they talked about releasing like a digital version of that session I was at. They have a whole lineup this year. So I was in Seattle. They're doing one in London, I think in June. There's another one in Atlanta that I might actually go. I think it's in August. I might try to go to the one in Atlanta because I can hook up with the A1 trading team and maybe spend a couple days with them in the office and then go check out some Tasty live on Saturday, wherever that is. It's probably somewhere near the ballpark or some venue that'll be downtown. But anyway, it should be a lot of fun. If you want, I can show you the links, and they're free to register for if you want to attend one live. But as far as releasing info, I mean, they gave us a nice little swag package. We had like Luckbox, little magazine subscription, CBOE and CME sponsors. So we had some instruments and trading stuff from them. So anyway, great stuff. We can talk about that more in Equities on Demand. Yeah, Daniel, I did get that. Thanks for sending that email. It's good stuff, man. That equity curve looks awesome. The P&L curve looks great. Yep. Cool. Okay. Ruth, if you are looking to open an account, remember in my Discord channel, I do have an affiliate link for Tasty Trade. So it can save you on the commissions. And, obviously I use it every single day. So you can see me navigate it. I can help you, get up to speed. Yep. Cool. Okay, so that's GLD, that's SLV, that's silver, that's gold. Let's go to Bitcoin. No chart alarms have gone off on Bitcoin other than this trend line break. We're sitting here at 67. Very curious if we're going to reach all-time highs, 73,882 all-time highs. Are we going to get to that big milestone this year? The Dow hits 40,000. The markets are at all-time highs. Bitcoin obviously hit all-time highs earlier, but are we going to see 100K? We'll find out. But it could be sideways as well. So we have resistance, we have support. This is a trend line break I'm talking about. This didn't make me buy any more. I'm still pretty much good on my core position, base position on Bitcoin. I also have the alternative exposure with the BITOs, IBITs, FBTCs, some of the approved ETFs, and some ways to trade options on Bitcoin. But of course, I'm long, and I'm looking to see if this one wants to run to 100K. That'd be pretty sweet. So we'll see if that does the trick. Currency wise, start with the DXY. We'll go back to the Japanese yen. Dollar index, in my opinion, is a make or break. I kept saying I'm going to look to see shortness on the dollar if we break below 103.90. I don't see it yet. So I'm still somewhat long the dollar, but not without confirmation. So I'm not actively taking long positions in the dollar outside of I'm long dollar CAD and I'm long dollar Swiss. Those are the only two that I'm in right now. Well, I take that back. I got filled on the pound dollar. Let me see if that one actually filled or stopped out. No, we're still in the pound dollar. So my stop loss is at 28.10. And if this son of a gun goes to the upside, I'm going to be a little upset. But anyway, I got in right around this 26.50, 26.60 area. So the stop loss is just above this noisy little range. I was looking to see if this past structure low would hold as resistance. It didn't. This previous high right here could be some noise in the middle of all this nonsense. That could be enough to turn. But again, it's all about the dollar. So this week we do have Fed minutes on Wednesday. I've seen a plethora of Fed speak over the last couple of weeks, and they're all saying the same thing. We might hike. We might not. Inflation's not what we want. We're a long ways away from 2%, blah, blah, blah. So FOMC minutes on Wednesday will be interesting to see. Are they moving the markets? Will they move the markets in addition to earnings with NVIDIA? So Wednesday to Thursday will be, I think, where most of this week's volatility sits. I am actually interested. I'm curious if the implied volatility, this is something we can consider for Equities on Demand this week. If we get into possibly like a Wednesday, Thursday, Friday trade, I do want to see what it costs. If I looked at some of the major indexes this week, I think I might just get into like a SPY or Qs trade on Wednesday to Thursday or Wednesday through Friday. And looking for something like a 1 to 3 DTE or days to expiration, and see if in fact we get a bigger gap on NVIDIA. Maybe play the long side of it and see if it's cheap enough to trade it, and then see that NVIDIA does in fact move the market. We gap up on Thursday, gap down on Thursday, whatever it is, and have the market go somewhere for us. So, all right, I see Fed speaker Barr is talking right now, just popping up in the Discord channel for the real-time news. The Fed doesn't want to get anywhere near balance sheet reduction. What's he saying here? Anywhere close to a balance sheet size that would interfere with controlling the federal funds rate. Most funds in private credit market are not from highly levered entities and face no run risk. The official the official cash rate, risk-free rates around 5.3% right now. 5.33 is what I'm seeing from the Fed. Monetary policy, again, it's being thrown out there, but it's talking out of both sides of their mouth. The CME watch tool for the Fed, the market's still anticipating a September cut. June 12th is going to be our Fed rate decision with press conference with Jerome Powell. There's expected to be the pause. That's a high probability. That's also the same day as US CPI, which will make for an interesting trading week, an interesting trading day. September is still anticipated with about 50% probability we will have a cut, and December, same thing. So slightly higher in December. If they cut in September, possibly one more for December. And yeah, so let's talk markets this week, right? Nvidia sitting here at 937, up about $13 pre-market. The anticipated move, I think I calculated this last week. I think Nvidia is expected to move about $120 for an earnings play. Tasty has it around $90. I looked at the last 10 earnings reports. I don't like that the last 10 earnings reports, only 3 of them have hit the expected move. So if you're an option seller, that's a good thing to have them be below the expected move, but you certainly don't want to be on the wrong side of that with an undefined strategy. So I would certainly keep the defined risk. I will probably trade something on Nvidia just in the money credit spread, so we can maybe take $7 to $7.50 of credit out of a $10 position, or at this time maybe they're $2.50 spreads. So maybe we can take out of $2.50, maybe get like $1.50 to $1.75. And so basically, I'm saying we can take about 70% of the credit, 75% of the credit, have a very small risk. If we do have an expected move, or we do exceed an expected move one way or the other, those credit spreads, maybe we can collect, let's say out of $2.50, we collect $1.75. We have a very small risk on one side, allowing us to be right on one, wrong on the other, and still walk away with maybe 50 to 75 cents net profit per contract. That's an easy way to trade earnings. It's not expensive. Our buying power is still very tight. And even if we have a blowout move, we can make some profit within a couple of days. So that's what I'll be watching. We'll price it out in Equities on Demand. I think that's going to be an interesting one. So NVIDIA, 2.31 trillion market cap. It's big enough to move the entire market. So I'm just, and again, this is just my opinion. This is just speculation here. But NVIDIA is going to be what pretty much the earnings market relies on, or the earnings news is going to be front and center this week. So if we have a blowout earnings report, you see all these E's in green, those have all been good earnings for NVIDIA, right? So let's say they do it again and they surprise the upside and this market loves it and NVIDIA is at all-time highs. Well, we're expecting to see a move of about $100. Okay, let's say we go from about 100 to 120. Well, if they blow that move out of the water and they go well beyond that, that's good for anybody that's long NVIDIA. Okay. However, based on what I see technically from the major indexes, I could see that blowout move coming back to get filled. And I just think it'd be wise and prudent to maybe protect some profit. Okay. Because if we have a big move in NVIDIA to the upside and it gaps the markets higher, again, all I'm going to look for is we had previous highs right here. Okay. Let's say NVIDIA pushes the markets higher. I could see us pulling back into that gap, pulling back into this previous high, being resistance, now becoming support to see if there's another chance to get a dip. Okay. This run to the upside after we had, our April correction and then a run to the upside to take out the highs once again, I could see the market doing the same type of thing. Highs slightly higher and then pulling back again. And then they carve out another win and we're staring at some type of channel like this that maybe blows off into Q4 and gets a capitulation move. Then we put in some type of topping pattern. I think 2025 is going to be a bigger correction, I think. If you think about it, from 2020's crash to 2022's reset, 2023 has been all bullish. 2024, outside of April, has been all bullish. If we stretch into a capitulation type move where we're talking about the S&P at 5,500 or even 6,000, okay, we're talking the Dow at maybe 41, 42,000. The Q's at what would the Q's be at? Somewhere around like maybe 20,000. If we just look at the charts and they look like this, if you look at the indexes and all you see is this, and there's a little pause here, there's a little hiccup from 2022, but if 2023 into 2024 is just straight up bullish, parabolic, exponential growth, I do think a topping pattern and a correction is likely happening, right? But that means that we could have some good additional momentum and get it while you can, chase the bubble a little bit, and certainly benefit from some directional flows to the upside as this market is embracing the, look, China's finally woken up. China's finally supporting the economy. China's finally more vocal about the upward supported technology and the overall markets, and that's lifting animal spirits. And the U.S. is doing the same thing. The Fed's not trying to get in the way, so we are actually experiencing a broader market rally right now. I think with a little bit of caution moving forward, but I mean, unless we have a black swan type event, I don't think this market's going to make some crazy, ridiculous bearish move in 2024. I think the market's like blinders on. It's going higher. It's trying to get everything it can. What's interesting, though, is how it's not just in the traditional led by tech. It's not the Mag 7. This year, it's utilities. This year, it's energy. This year, it's financials. This year, it's Bitcoin. This year, it's gold. This year, it's silver. There's a lot of other things leading the charge instead of just your typical, S&P 5, S&P 10. If you're in the top 25 of any index, you're actually doing really, really well this year. The top 25s continue to outperform, week in and week out by like a landslide. I mean, take the Russell 2000. If all you had was a little exposure on the Russell 25, the top 25 in the Russell, they are absolutely crushing it this year. And again, be careful on some of those stocks because they're highly volatile, and you have a lot of pharma space and biotech. But man, the top 25 is crushing it. So just something to be mindful of. All right. So we're about 2 minutes away from opening bell. Let me get logged into my Tasty Trade platform here, and I'll take some requests if you want some charts to look at. Overview dollar-wise, take a look at some currencies. Bitcoin, we did. I'll take a look at oil. We did gold. We did silver. Earnings this weekend, NVIDIA, where we're sitting with the indexes at these overbought conditions with divergence. I'm a little cautious. I might look for some 1 to 3 days expiration on the SPY, on the Qs, and see how they play out with NVIDIA earnings on Wednesday if it's a big one. Let me move this over here. Okay. So 2 minutes from opening bell. Everything pre-market is slightly higher. The Dow up to 400. The Qs opening up around, that's not much, only 15 cents or so. So Monday could be, I don't know, could be a slow day on Monday. It typically is. If we take a look at our Edgefield dashboard, if I go to high-low by weekday, let me take a look at average trading range. This is going to be an indicator. Average true range. Let's go the last 5 years. Incorporate some downturns in it. Mondays through the week. Okay, Mondays through the week, we typically respect the daily trading range 77% of the time. So right now, ATRs are on 482. This is the previous 14 days. Mine on my charts here, if I go into the ATR, I'm showing a slightly higher ATR based on the 14 period. So let me go SPY. I'm looking at 448, and on my Edgefield dashboard, I'm showing 482. Okay, so 448 versus 482. Again, I mean, basically, it's saying that we're going to expect a move to be under $5. So if I had a chance to go into my dynamic trend, get some option software, let me see some gamma levels for the day, and then I'll get into my broker platform, maybe take a look at a couple of annual exchange agreements. Sure. Okay, good. Now let me in my platform. Here we go to Tasty. Good there. All right, let me see if I can get into my dynamic trends. Look at some gamma levels today. We'll start with the SPY. Float this down here. Let's go pre-market. Oh, this is SPX. So SPX trading something around 5,300. I'm wondering, well, if the market rips up today, we're opening up around 5,305. We do have some gamma levels higher at 5,324. The bulls have stepped out. I get a lot of this like 80 to 83% call option sentiment right out of the gates. So could we go up, 20 points and retest the all-time highs? Yeah, it's possible. I might look at a cheap butterfly at 53.25, or I just look to sell it. So let me see. I doubt I'm going to get a broken wing just because the IV is so low. The SPY's at 8.6. The SPX is going to be about the same. It is the same. The Q is the IV rank, 9.7. The Dow is down. The Russell's a little bit higher. The Dow's at 9. The IWM, I think, is in the 20s. Yeah, I was going to say 27. It's 28.5. So selling right now is probably not the best. If I go to the SPX, go back to my gamma levels here. So let's see. I don't see Mondays typically as big days. I could see us getting up to this 53.25 level. Let me see if I can put on, let's go SPX trade. So if I did a May 20th, and the gamma level that I'm looking for is, I could do two things. I could do a small debit right up here around 53.25. See what that would be, a call butterfly spread. So 53.25 if I pin it there. If I did $10 wide, I have to pay $1.65 for that. Whatever, dude. No thanks. I could pay 40 cents for that debit right now. Obviously, if I pin it towards the end of the day, it would pay some more. If it rallies up to that point, I mean, that's a 17 delta on the pin level at 53.25 if we get there. I could see it just lingering around 5,300 today if we have a pretty boring day overall. I don't need a trade right out of the gate. I truly don't. But this would be, a valid level at retest the highs. It's only a 20 to 30 point move on the day. My issue though is, and I think it's going to be just a happy little hypothetical trade for the late great Bob Ross, right? Happy little trade. I think I'm just going to do a hypothetical trade. If I did a 53.25 long call butterfly spread at like 35 to 40 cents, I'm just going to write this down. So I could do a 40 cent debit today and just monitor this and see if we do get up to 53.25, what is it trading for? If there's an opportunity for that 30 to 40 cent debit, 35 to 40 cent debit to trade for, 70 to 80 cents, great, take the profit. I wouldn't want to have to take this trade and wait all day for it. I could also just look at being long the SPY, but like I said, I'm probably going to trade more Wednesday, Thursday, Friday with, we can digest the weekend, we can digest the all-time highs, we can start off and see where the markets want to go this week. But NVIDIA is going to be what I think is the major mover and catalyst. So we have FOMC minutes, NVIDIA on Wednesday. That'll affect a lot of Wednesday to Thursday to Friday's trading. Just my thoughts. Okay. All right. So I'm going to monitor that one. So if I got in for a 40 to 45 cent debit, I'm going to look to see what the bid price is trading for. That's truly what I know I can get out of the trade. Last week when I took that butterfly, I was in for 30 cents, closed it out for 65 cents, and the thing ran up to $1.90. So, and that was on the bid, right? So I was filled here at 30 cents. The bid was $1.90. The mid was $2.50, and the ask was up to like $3 towards the end of the day. And the nice thing about the SPX is if you really stick it out through expiration, these are cash settled. So it would have cash settled at the minimum $1.90 to whatever. But I would get no assignment on the butterfly, even if it was inside of the butterfly strikes. There's no cash, there's no assignments. So it just cash settles on exactly where you get the trade. So that is kind of a nice thing to trade the SPX. All right. Anyway, I'm going to keep an eye on this. So this was a little 520 butterfly. But like I said, hypothetical, I'm not going to take the trade right now. I'll wait for Wednesday, Thursday, Friday to throw in some, 0 to 3 DTE. We could also do the same thing if I traded back towards 5,300 today. Maybe we have a choppy day. Trade back to 5,300. I want to price that one out really quickly and see maybe. So if that was a 40-cent debit, let's see what it is if I did it back to 5,300. This one I'd switch over to a put side. So 53, I'd keep it really tight, spend maybe 40, 50 cents. And that'd be at 53. So one would be 53.25, and then one would be 5,300. And if one of them settles in where I'm sitting close to or at one of these levels by the end of the day, so let's say that we're sitting here at 53 by the end of the day. Well, that 50-cent debit's probably trading for $1.50 to $2.50. This one up here, if we're sitting up here, that 40, 50-cent debit's trading for probably $1.50 to $2.50. So that, I mean, if I'm willing to risk, 40 to 50 cents on the day and it settles in, I don't think that's a bad play. So that is that. And obviously, if we have a directional day, then I can lose on both. So that's why I'm just going to chill and let it be a Monday and figure out if I can do something else. Okay. All right. Let me see some chat. Let me see some questions. Let me see some charts. I'm going to go a couple more minutes. Let me see if A1 Trading reached out. Yep. I'll be on the session with them at 10 o'clock. So I'll put a little, pause here, wrap up the Pulver report in about 7 minutes, take a little breather, and then come back at 10 o'clock and I'll stream on my channel, youtube.com/Chris Pulver. And then I'll jump in with A1 Trading, Nick and the team, say what's up and see how they're doing, and probably grab a little bit of the show. I think Frank is still gone. He's still in Europe, I believe. He sent me a message yesterday. Let me check on that really quickly. So NVIDIA Iron Condor. Oh yeah. I'm just typing Frank a message just in case NVIDIA goes beyond expected. Okay. Let me go back to the chat. All right, let's talk currencies for a second, and then I'll wrap up the Pulver report, and I'll come back in at 10 o'clock with A1 Trading. So dollar index at 104.57. I said this the last couple of weeks. As long as the dollar remains above 103.90, I'm still going to give the dollar a chance to show we have some support. This would be my trend line break. I'd like to see it hold in here, possibly comes back in at that 103.90 and bounces back up and breaks a trend line. If I got long stop losses there, if we want to see if the dollar is going to come back and maybe retest these highs, maybe thinking that the dollar goes all the way up here is wishful thinking. I don't think the dollar is really going to be that type of trend. We might have some chop on the dollar. And I mean, heck, we might do this. We might have the dollar, somehow go from a broadening pattern where it's like, oh, the dollar is going to make higher highs and lower lows. And instead, maybe it starts doing this, where it starts getting more narrow, right? And this becomes a tougher and tougher instrument to trade. So I'm thinking ahead, and I'm trying to be cautious, and I'm trying not to be kicked around and confused by the dollar giving us different outlooks. So for right now, we're at support in the dollar. If it stays there, I will see if there's a chance to look to get long the dollar. That would make some sense to see a correction in the skip space on the technicals. So if the dollar gets a little bit of love because of that, maybe we have some risk-off trading. Maybe NVIDIA misses and it becomes a combination of dollar strength. Maybe the Fed says something to dollar strength. Maybe the market sell off a little bit post-NVIDIA. Who knows? So, like I said, my week this week is probably positioning more around NVIDIA, short-term ETFs. I'll probably take a look and do a little research on, what type of futures trades I want to consider getting into. The nice thing is there's some ways to get into micro futures and get some light exposure. I wouldn't mind starting that. We had a conversation in Equities on Demand not too long ago, maybe in the last couple of weeks, but or maybe it was in this session. No, it was in my video that I posted the second half of 2024 and the 2025 video on my YouTube channel. If you just check this one out. So youtube.com/Chris Pulver. It was the 2H 2024. Just go into videos right here. This market prediction. We talked a lot about the Japanese yen, getting some exposure through FXY, getting some exposure through possibly Japanese yen futures. There are Japanese yen micro futures as well. I think that would be a good way to start. I just want to see how long I have. I mean, if there's a timing factor involved, which obviously with options there would be, but if I just had straight up, Japanese yen exposure to the futures market and I take a really small trade, then I can essentially dollar cost average into it like I would in a Forex trade. Now, we all know that that's a scary thing to do in the Japanese yen in case something wild and crazy happens, but we will see. So anyway, we'll talk more about that. All right. Right out of the gates, market's up a little bit, up about 12 points. One more thing I want to take a look at for this week. So a couple things to note, just some indicators here from Edgeful on TradingView. Last week's high was broken. Market indeed went higher. If we break that we're trading, this is a brand new week. So we have last week's high right here. We have last week's low right here. Is it possible that we break again this week's high? If it is, probability is we're going to close above the highs and not take out the lows. That's the highest probability. So if this market, struggles to take out the highs today, struggles to take out the highs tomorrow, it's all about NVIDIA on Wednesday, Thursday, Friday. Okay? So if we do not take out the highs, there's a chance that it's possibly going to breach these lows, and that would be the correction I'm talking about. Right? So I think the market's excited. I think the market is fairly optimistic to the point now I'm seeing overbought conditions with divergence. So a little cautious to be aggressively bullish, but I think we can time it well enough this week to get some volatility around NVIDIA and see where the movements are at, and maybe not overpay for long options or obviously stay on the right side of an expected move. But IV is so low right now, the VIX is so low right now. Just be careful on those short-term sell options because you're going to get maybe 8%, 10% if you're lucky selling options right now. It's not great. Okay, so if we have a slightly higher IV, I'd like to see that the IV ranks go, let's say if the SPX goes back up to like 15 to 20, I'd love to see the IV rank there to just start selling premium again versus seeing the, single digit, everything is super, super crappy sell premiums on a day-to-day, week-to-week basis. Okay. So, all right. I'll let you go for right now. I'll take a 15-minute break. I'll be back. Thoughts on REGN? Sure. I'll take a look. Let me get back into this chart here. REGN, pharmaceuticals. I don't really have a thought on it because I've never seen the stock, but let me bring up a little snowflake analysis and I'll give you my quick 1 minute overview. So REGN. So we're on Regeneron. This is what I see trading below estimate value. Earnings and forecast at 12.44 or 12.44%. A lot of insider selling in the last 3 months per Simply Wall Street. If we go into, overvalued, undervalued, it's slightly undervalued, but not much. Technically, I look at this chart and I would say I'm probably leaning towards more. I mean, if I'm strategy diverse and product indifferent, this doesn't really mean anything to me. I see this price. I could see this happening where we hit some highs and we stall and we have some sideways movement, right? I mean, this has been mostly in an uptrend. After we have a push, we have sideways. We have a push, we have sideways. We have a push, probably sideways. So, I mean, it's an expensive enough stock. I mean, I could see like an iron condor being a trade on this one that could work out pretty well. If I did like a 15-20 delta, let me just take a look at it and see if there's options around this. Just curious. So REGN. There it is. And let me make sure I'm not missing any earnings news. Earnings would be through August. So, I mean, I could go out 30 to 45 days without any issues. I could probably go out to July's expiration and do an iron condor. If I went out July 19th, that'd be 60 days. I don't mind that. And let's go to a like 15 to 20 delta. So if I did, let's go 17 delta. If I do a bear call spread, and then I'll do on the put side, same thing, like the 17 delta, 905. So right now for a $5 spread, this actually isn't terrible. This isn't bad at all. I could do an iron condor on this, collect $2, and oh boy, this spread is super wide though. So I mean, the mid is showing like $2.30. If I could get that on a $5 spread for an iron condor, that is incredible. There's no way that's going to be filled. That there's no way. There's no way going that far out of the money. 15 to 17 delta selling that. It's defined risk. I mean, I'm only tying up about $277 buying power. If I'm right and I let it go all the way to expiration prior to that earnings report, let's see where 106.5 is. 106.5 would be way up here. Okay. And then on the downside, I mean, I guess my bull put spread might be a little bit in jeopardy. Okay, because I would truly want my bull put spread to be below like $880. But it is instead, just based on the deltas here, 905 by 900. What did I say, 880? I mean, I can't go lower than that with my strikes. I think I have all strikes out, so it doesn't go any lower at this point. Could I go flip these down? Now we get $1.73. I mean, probability profit at 71%. That seems like a low pop for a 15 delta iron condor. But if I did it just so it's delta neutral, I mean, if I got filled at $2 on this trade, I mean, I can see, I can see it jumping around here. That's about the only trade I can see taking on it. If I look at the chart, if you are long in this for whatever reason or short in this and just taking a direction, that's fine. But to me, I'd say this upside is capped right around this 1,000 to 1,040. On the buy side, if you wanted to wait, comes back down close to this level, starting to establish a long position there, or do some out of the money, credit spreads where once we come to support, get the out of the money credit spreads here. The IV might increase a little bit if the stock, in fact, does sell off. But I would probably just do a bear call spread up top, or if it comes back to the lows, do a bull put spread down here. For a stock that's almost $1,000, I'm not interested in owning it. That's way too expensive. I mean, fractionally, sure, if you like it, fractionally, but I'm not owning 100 shares to control options on this. But that's my thoughts. That's Regeneron. But I literally know nothing about the stock, so doesn't matter. I can still take a trade on it, but it'd be defined risk. Okay. All right, everybody. I'm going to put a pin in this, come back to the 10 o'clock session. Okay, I'll jump in with A1 Trading. You can follow that stream with my channel. I still push this out on my YouTube channel, youtube.com/Chris Pulver. A1 Trading will be pushing through Twitter, and I don't know if they do Twitter and Facebook and YouTube and maybe something else. But either way, we'll be live, and I'll just be pushing through my channel, and we've been having a lot of fun working together. So I will chat with y'all soon. Really quickly, as I'm watching this, I want to go back to my SPX because we are getting a little bit of a rip to the upside. So let's go to the 20th here. If I did the call spread and I had the 53.25, right now the 53.25 butterfly is now trading for 50 cents, 55 cents, 70. I mean, if I could turn a 40 to 45 cent debit into 65, 70 cents in the first, 20 to 30 minutes of trading, I might just take the profit. But if this actually gets to my price and hits my gamma level at 53.25, which is what I'm watching, and that's why it's hypothetical, because I want to see if I did this, at 9:30 or 9:45, and I did like the trade and it does hit my strike. Now, the most profit's going to be if I held this all the way to expiration, but I don't necessarily want to do that. If I had a small profit where I could turn, a 40-cent debit into right now, look at this. I see it fluctuating at 55, 60 cents debit. Like doesn't seem like much, but even grabbing an extra 15 to 20 cents on a 40-cent debit, that's still a pretty good return percentage-wise. And you're getting that on the SPX intraday. So there is some validity to looking at some debit, some of the butterfly spreads with debits. They don't have to be large. I mean, obviously, if you want to make more money, I can risk $1.60, right? You saw that this morning. I did $10 wide. It was $1.60, and I was trading for $2.40. So if I wanted to make some more money, I can go a little bit wider, right? It was $1.60, $1.65 debit, and I was trading for $2.25. I can make a quick 50, 60 bucks this morning. Food for thought. Okay, so always stuff. Okay, everybody, I'll see you in 10 minutes. Come back to the channel, youtube.com/Chris Pulver. Equities on Demand students, I will see you at 11 o'clock for our session for Monday. All right, thanks. See y'all in about 10 minutes. Bye.